You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for the option block, everyone's favorite, at least I hope it's your favorite, bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, education, a smattering of what's trading and some unusual activity, and occasionally an interview here or there. And you have the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network episode, or I should say program 14, hitting the network last Friday. You guys haven't heard it yet, so it's not live to you guys yet. We're still tweaking and fiddling behind the scenes here, but it's been new to us for a little while now, so we're kicking it out and should be available for you guys soon. Of course, the easiest place to find that when it does go live, the mothership, the flagship, theoptionsinsider.com. Of course, while you're there, make sure you click on some articles, some headlines, some analysis, some education, all that fun stuff. And then when you're ready to go for some radio, then hit the Insider Radio Network tab, top left corner of the page, or the call out on the right, or even the player right there in the middle of the page. You really can't miss it. We made it 3 different choices for you guys. And of course, if you'd like to find it in alternative platforms, we welcome that as well. iTunes, TuneIn, Stitcher, so on and so forth. Just got the notification about 10 minutes before we went live that we are indeed live now on the Google Play Store. As Google is wont to do, they are rolling it out still in some form of a beta. So if you see that link, or if you search for us in the Google Play Store, if you just don't have the podcast live for whatever reason on your device, there are a myriad of handsets in the Android ecosystem. So if your particular device is not activated yet, don't blame us, blame Google. We are live. We did our part. Now it's up for them to do their part and roll it out for everybody. So if you're tired of using some other third-party apps, or you don't want to use iOS stuff anymore, you want to use Android, well then, there you go. We made it even easier for you. Or you can just skip all that nonsense and just grab our app, available for iOS, Android, the Fire OS. Same experience pretty much across all platforms, and it just makes it easy to plug and play. And then you have access to our full archive as opposed to whatever truncated stuff those different stores and portals put out there for you. And of course, while you're listening, while you're downloading and streaming, we love to hear from you guys. Send us your questions, your comments, and indeed your live feedback via the Mixlr chat room as well. We'd love to see you guys in there as well. And joining me on the old program, starting off, let's go in order of proximity this time. So starting off really close in the sleepy provincial hamlet known as St. Charles, Illinois, we are joined by none other than Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
Oh, always good to be here on the option block on a beautiful day.
It is a ridiculously nice day, almost to the point where you feel like we should be outside and not doing the show, right?
Or just doing the show outside.
Oh, that would work too. Joining us a little bit farther away from home, but still close to his home at least. We are also joined by the Rock Lobster himself, that would be Uncle Mike, the Rock Lobster, Mr. Andrew G. from the land of the pit, as well as that provincial duchy we know as Maine. Mr. Rock Lobster, welcome back to the program, sir.
Thank you. It's the land of all the lobster you can eat. Well, not exactly really. It actually, but it still is. It'll never be cheaper than it is in Maine. $3.50 a pound right now. $3.75.
It's like buying gas in Kuwait. You know, it's just the place to go. It's abundant.
It's if you want lobster, it's the right place to go.
Maybe Saudi Arabia. I'll take that one as well.
Or Saudi Arabia for oil. You gotta, when in Rome, you gotta do what the Romans do.
Yeah,
so here, you eat lobster.
If you had it planned right, you have the winter house in Saudi Arabia for all the cheap oil, have the nice summer home in Maine for all the cheap lobster, and there you go. You're living all seasons like a king.
And you'd probably save so much money because it wouldn't cost you for any energy would be cheap. Just the plane ride back and forth every 6 months.
And you power that with lobster oil, and you're all good to go.
Exactly. Lobster oil. I don't even know if there's such a thing as lobster.
The little-known boom of the mid-colonial period. Everyone knows about whale oil. No one knows about the lesser-known lobster oil and the very quick boom and bust cycle that happened. I think it was about 3 weeks in Maine in about 1742.
Exactly.
All right, before we get too far down that rabbit hole and I make Mr. Rock Lobster fall off his chair with laughter, we are also joined by a newcomer to the program. He is Mr. Mal Clissold, the president and owner of SCC Capital Group. Mal, welcome to the Option Block program, sir.
It's a pleasure to be here. Thank you very much for having me. And I'm in Tennessee, and I think you need to know that this is the catfish capital of the world.
Well, there you go.
So,
I like that.
Catfish oil.
If you want some catfish, let me know. I'm not sure it's in the same category with lobster, but anyway, we eat a lot of it down here.
Well, Mal, I'm glad to have you on the program for a couple of reasons. First off, it gives me a nice, fun chance to use our interview block drop. We don't get to use that often here on the show. And you might imagine Uncle Mike and Andrew are always whispering in my ear, hey, you should get this guy on, you should get that guy on. And I usually ignore them. But every once in a while, they come together on one guest, and they say both agree they have to get this guy on. In this case, it was you. So when they both get together in unison, I decide, all right, maybe I should listen to them. So we decided to bring you on. Without further ado, let's get right into it. It's time for the interview block.
The interview block.
All right, Mal, you can see they are applauding wildly for you out there in the realm of the interview block. This is, of course, the not often heard segment of the program where we break down. We have a lot of interviews and guests on other programs. We don't tend to do it that often on the option block. We usually get into the meat of what's trading, but we like to mix it up every now and then, and we're doing that today. Like I mentioned, we are joined now by Mal Clissold, the president and owner of SCC Capital Group. So, Mal, as we are wont to do with all of our first-timers here on the old network, why don't you go ahead and give our listeners a bit of an overview of your background in the financial markets, as well as what it is you guys actually do over there at SCC Capital Group.
I've been in the financial markets a long time. I went to the University of Chicago for my MBA. I started out in fundamental analysis in New York City with several different organizations. I spent time in the equity side of the business. I came to Nashville and worked with J.C. Bradford here for quite a while until they were sold out. And worked in bonds, actually. So I've had a lot of experience in fixed income. Started actually in the money management business in about 15 years ago. And I've been working extensively in options for quite a bit of that time. And decided to, over a year and a half ago, to start a fund called Summit Premium Plus Fund, of which SCC Capital is the manager. And the fund is designed to capture premium by selling options on indices, exchange-traded funds, individual securities, and provide consistent monthly returns. So that's basically what we're doing. And I'll just go ahead and say, since inception, the fund has been up 29.9% versus the market being up 8%, or 8.8% by my calculation. So I worked very hard to try to smooth out the volatility. There was some volatility in the first few months of the fund, but anyway, since about February of 15, the fund volatility has been 1.66%. That's based on the average volatility of each month's return compared to 3.1% for the market. So I'm beating the market significantly and with less volatility. That's what I'm doing.
Now, Mark, doesn't that sound like somebody we would want to have on the show? Somebody that's beating the market with less volatility?
That's always a nice thing, because also the old saying, you can't eat risk-adjusted returns. So it's nice. It's nice to actually make some money on top of it. So sharp ratios are great, but making money is also good too.
So I have a couple questions for Mal. I think that would help our audience, because we have a lot of home gamers, a lot of traders. A lot of retail traders that are probably trying to be, we'll just call them mini Mals, trying to run some sort of a smaller size book of options where they sell option premium. So I just thought, Mal, since you do a pretty good job of doing it, what would you give as far as some risk management ideas, or some things you've learned as far as how you've managed risk for your fund and been able to generate better returns out of it?
Well, the first thing I would say is that you really have to be willing, and I know there are a lot of people who do write options successfully on individual securities, but to do this, you really have to be prepared to devote the vast majority of your time during market hours to watching the market, because of the volatility. Now, we haven't had much volatility in the last few weeks, but we certainly had plenty last year and the first couple months of this year. And if you're not willing to do that, you probably should stick to what you're doing and not try to do too much of this. But the first key is position sizing. You just can't take on too much risk and risk having a negative event happen. So whether you just don't put on as many positions or you hedge your positions and thereby reduce your risk, that would be the absolute first thing. Also, you have to, by watching the market on a full-time basis, you have to be prepared to make a decision to unwind your position, to take a loss, reestablish a position at a later point, and not let things get out of hand. If you're doing that, oftentimes, when the market's in an especially volatile position, you can make intelligent bets about putting on positions on when the implied volatility goes up and hits a certain range and seems to be coming back to a mean. So it's very active trading and very intense during the market hours.
So if it sounds like you control risk by position sizing. If things are starting to go against you and you feel like it's going to run away, you'll close a position down quick and take a small loss. Now, just for Longo and Tucson, what do you think those are? Do you think those are good messages in general for our audience? And how many times have we heard the opposite of that from listener questions?
Come on, take a big loss. It's more fun.
I'm actually just disappointed, because you told me when he was going to come on, he's going to talk nothing but selling max margin weekly puts. So that's what I was plugging going into the show today for all of our listeners. I'm sure they're all very, very disappointed right now. All this quality returns and risk adjusted stuff. What fun is that? Swing for the fences, sir.
It's just, Mal, it just sounds very boring, even though it sounds like you get plenty of excitement. You found a way to generate a lot of excitement in catfish country, is what you're saying.
There you go. That's going to be my nickname, Catfish Mal.
I am so jealous right now.
I know. You know what? He's got a better nickname than you do, Mike.
I don't know. I think Lobster Andrew is pretty good too.
I'm glad I put a lot of
Lobster
thought into these
Andrew's
nicknames. I put a lot of thought into these nicknames. But Mal, you kind of touched on your background a little bit there. How did you come across this style of trading? Did it just evolve for you over time? Maybe did you start off like a lot of our proverbial retail listeners, maybe blasting out some puts on individual names? You mentioned you have a hard time doing individual names because of that. Maybe you learned your lesson from that, or how did you arrive at this style, this methodology of trading?
Experience and some hard knocks and some positions that went against me, and that's what it was.
It sounds like how we all learned, which was the hard way.
It's not easy, and you just have to be very aware of how things can turn against you. Now, I would point out that in August of 2015, we all remember that the market was down, well, by my calculation, 6.26%. It seems like it was more than that. The fund was down by 0.8%. So I outperformed by 5.5%. In September of 15, it was down 2.4%, and my fund was up 2.9%. So that was another 5.5% outperform. In January this year, it was down 5%, and the fund was up 1.09%. So that was basically a 6% outperformance. So I think the facts speak louder than any words. I mentioned the various things that I do to try to control volatility, and I'm pleased to say, I'm not going to predict what will happen in the future. We know none of us can do that it's been successful. It's working, and I can't just say enough about sitting and watching it all day long and being ready to take action. And right now, implied volatility is relatively low as the market's gone up, and we now know that all the things we were worried about last year and for the first 2 months of this year aren't going to happen, right? So everything's hunky-dory, and all we need to do is go out and get some catfish and tartar sauce and French fries and enjoy ourselves.
So I guess what you're saying is
in the unlikely event maybe I should say likely event that doesn't happen, and that everybody gets worried about the Zika virus or some international incident or monetary affairs and all the various risk factors that are out there, then you might want to consider my fund. I was talking to a potential investor last week most of my investors are friends and family at this point, and most of my growth has come from their reinvestments. And he asked me, in what case will you underperform? And I said, well, probably in months when the market rips ahead by 8%, the fund isn't going to do that well. It'll be up, but it won't be up 8%. But
right.
I think I can outperform over any reasonable time. My goal is to outperform over any reasonable period of time, like a year or so. And unfortunately, I've been able to do so for the first 21 months of the fund.
Now, Mal, you mentioned earlier Q1, the first half of Q1 in particular this year was one of the most tumultuous periods in recent market history. I'd imagine you probably had some interesting days and or nights during that period. Walk our listeners through some of your thought process during that period. You're primarily, short vol trader. So what was that like during those periods? Did you make any special adjustments to your position sizes as a result? Sometimes not trading going to cash, also a position. A lot of our listeners maybe don't think of that. So maybe did you utilize that special position? What were some of your takeaways? What were some of the things that really come to mind to you now as you look back, particularly over that very period, January and February timeframe of this year?
I took positions off, and I just took positions off, put them back on, did the things I previously talked about. I sort of don't want to be redundant, but I really have to be redundant. During those periods, the market was changing within the day. We had 400, 500 point swings within one day. So you just had to be very nimble, and I'm certainly not going to say I won every day, but I guess I won enough days or more days than the opposite happened.
So Mal, do you have would you close positions and wait to reopen them? So if you sold some SPY put spreads, let's say, not knowing exactly what you're doing, but say if you sold SPY put spreads, then you see the market kind of tanking, you close them and get ready to sell them again if things turn around. Is it something kind of along those lines for listeners?
That's what I'm saying, yeah.
Okay, so just for the viewers at home, he actually closed positions that weren't working out quickly, and then he waited until there was a better opportunity to put them on, which begs the question now, is there anything you like right now in the market at all, really?
I have some of my regular positions on, but I'm pretty cautious right now just because the implied vol has gone down so much, and I don't see a lot of opportunities, and there isn't much premium there to chase, so I'm not going to try to chase it.
That makes sense. If you can't squeeze blood from a stone, so at least at this point in the market, I agree with you. There's not a tremendous amount to sell. So, but again, tomorrow's another day, and I think it sounds like one of the strengths of your strategy is you might not have something to sell today, but there certainly can be something tomorrow.
Yes, we know that it can change by the end of the week, if not before. If not this week, next week. And if you go in too heavy right now on selling positions, you have to manage those during the period. Just as soon wait a little while. If I leave something on the table, so be it.
Well, I like to hear that, Mal, because I can't tell you how many people we've encountered during the time doing this program and all the other things we do here at the Options Insider, and they fall in love with one approach. Typically, it's the premium harvesting. I don't get too many people coming out to me telling me how much they've fallen in love with buying straddles or buying premium, but I suppose it happens on occasion. And then they kind of just force it regardless of day or week or volatility environment or market context or all the other things we talk about at length here on this program. So I'm glad to hear that when the conditions aren't ripe, you don't fire your bullets. You'll keep your gun in your holster and wait until those conditions are ripe. So just really quickly, let's as we're winding down here before we move on into our trading block here. You mentioned kind of some of your broad rules, some of the things you like. Any other things you want to leave our listeners with? Maybe some strategy keys or adjustments that have worked for you in the past, or maybe some general guidelines that have worked for you here that they can maybe take and apply to their own trading.
Well, yes, I just said we need another crisis in the world. I would say the best thing they could do would be to give me a call at 615-370-1770 or email me at mal, M-A-L, at mclissold.com. I hope that wasn't a shameless plug, but that's what it was meant to be.
We do it all the time, Mal. Don't worry. Shameless plugs, that goes with the territory when you're on the show.
I was going to say, these guys load us up with shameless plugs.
I know that everybody owes it to themselves to just watch what they're doing very carefully and be very careful about what you are doing.
I think that sounds like a good way to leave it, Mal.
Okay. Well, I'll try to think of something more insightful for my next visit.
All right, well,
that would be nice.
Listeners, he gave you his contact info. If you want to hit him up, you can check it out for yourselves, or just search for SEC Capital Group online, and that will bring you to him as well. Or you can always reach out to these guys, Andrew and Mike. They could direct you to Mal as well if you have more questions. And speaking for us, though, we're kicking off into the teeth of earnings season, so it should be time for a pretty chock-full trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our eye in today's market activity. Most of the major indices up pretty strong on the day, a 0.5 percentage point or more. S&P up about 0.75% or so. The NASDAQ, tech-heavy NASDAQ, up about 0.5%. And the Dow, the Goldilocks in between, about 0.6 of a percentage point, right over that magical, that mystical 18,000 level. So we'll see what that portends for the future of the market. All this upside, of course, VIX cash inhaling, but not perhaps as aggressively as you might expect, because there are a few things on the horizon, including right now, after the bell here, we got the old Widowmaker coming off here, and this is an interesting one to watch. It's been known in the past. We call it the Widowmaker because it has made a few widows and orphans out there. Most famously, or perhaps infamously, we got cut by about a third or so. What was that, a couple of years ago now, when they had that crazy changing of the name and all the other stuff that they were doing. They were taking it on the chin a little bit today, probably because Amazon announcing their competing streaming service for videos is going to go live now as well, separate from Prime. You don't need to be a Prime person anymore. So that, of course, directly aimed at Netflix. That, of course, was leaning on today. They were off about 3% intraday, closing about 108.5, and then going out there. They were pricing about nearly a $12 straddle, about 11.75 or so. So that prices into about an 11%. And surprise, surprise, here they are on the after hours, taking it on the chin yet again. Not perhaps as aggressively, about $10 off in the after hours, trading right around 98.5 right now, off a little over 9% in the after hours. We'll keep an eye on that one. But before we get any further, perhaps we'll start with you, Uncle Mike. What caught your eye in today's activity, sir?
I would say this is another one of those day trader markets in that we started off the day at a point to where, let's bring up my chart here. We actually started way down, and not way down, but we definitely started down. But we had a 20-point movement on the S&P. On the futures, they were down, and so when that opening bell rang, buyers came in and they never left. So I think that, with today, we experienced a lot of a gapping market a lot last fall. And today was quite the opposite of that, and that we had a bit of a gap, but the gap was filled relatively quickly during the day today. So that was one thing that caught my eye. The other thing that caught my eye on the day had to do with the slippery stuff, and that oil is down slightly today, crude is, but XLE, the energy sector, is up almost over 1.5%. So that I thought was kind of interesting. It caught my eye. Gold was relatively flat. Bonds were down slightly. But overall, I would say this is one where someone sent out a buy memo right at the open.
Certainly had that feel to it, and you're right, after the big oil event over the weekend, taking a little bit of a break out there. As you might expect, crude vol also shaking on the chin, OIV, OVX, depending on which you look, both taking it off quite a bit, about 5 handles out there in OVX, similar amounts in OIV, right around the 46.5 level. It was flirting with the 50-odd range and beyond for a little while there. Not surprisingly, the big event happens, crude vol coming in. So vol coming in a wee bit across the board. We'll see if perhaps this Netflix news here, this sell-off, is perhaps a sign of things to come. Perhaps that 18,000 level going to be in the rearview mirror. We'll see. Mr. Rock Lobster, we'll turn to you now. What's catching your eye out there in today's market activity, as well as what was lighting it up in the old pit chat? Were the pit chatters chatting about the Widowmaker today?
Right at the end of the day, we looked at dueling butterflies, which we didn't have enough time to really cover it, but it was you could trade the 105, 100, 95 put fly and the 110, 15, 20 call fly. The net debit, I think, was $1.28 for those two flies put together. And, it looks like Netflix is trying to hang out right around the par strike. So the flies would have been okay. We looked at that really at the end of the day, is just because it's actually been a trade in Netflix that's worked pretty well. It's basically just moved 10%, kind of hung there for a little bit. And again, it's like any other earnings trade, but it was one where, you don't sell the straddle for $10, then figure out how to buy it back at some other point. So it has a little bit more risk control than the average trade. But mostly just the VIX futures were very expensive relative to cash at the end of last week. You guys probably covered it on Vol Views. And I think because of this OPEC, and of course OPEC could not agree on something. That was a shocker. And they took literally all of what I would say the abnormally high premium out of the futures, boom, out today. So products like XIV went to the moon, SVXY went to the moon, VXX and UVXY got crushed. So even with the VIX only down 27 cents, products like VXX were down $1 to 15.87. Products like UVXY down 221 to 15.23. So both of those products look like they're getting ready to do the reverse split land again. And they literally could be in the single digits by, I think, deep into the May cycle. It's certainly theoretically possible for them to be there. So futures are still not buying all of this. The only part of the market that really hasn't bought the rally, I think, has been the VIX futures. They just stayed very expensive, even though there has been individual sellers of option premium. Actually kind of like Mal alluded to. I mean, they sold vol from 17 to 13 in about 2 weeks, and that's where we sit. So we have a lot more technology coming out. Netflix was kind of a go-go bellwether stock, so I'm looking for the Microsofts, the Apples, the Googles to see. And my guess is I'm just, again, wild speculation that I think those companies are still thriving. So we will see. And I think if anything powers us, it will be surprisingly good earnings, because all the financials have done the sandbag central on earnings. So, and it seems to have worked out since the financials are all starting to creep back up again.
Like you threw out a few little pearls, little nuggets there, but I do like dueling Netflix butterflies. Perhaps they have a show title after all. I like that. I like that concept. Like we said, Netflix always a fun one to watch, and you're in the teeth of earnings season, particularly the retail centric, the ones that a lot of the retail traders like to watch when you see Netflix lighten it up here after the bell. Speaking of lighting it up, we got to keep on rolling with our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down the weird, the wild, the bizarre, the sometimes just head-scratching paper that is lighting us up here on the old options market today. I couldn't kick things off if the Odd Block wasn't weird enough, Mr. Rock Lobster. If we didn't get into enough weird land, we're going to start things off in tinfoil hat territory, courtesy of our friends over there at the Carlye Group, a.k.a. the group that is named just about every one of those behind-the-scenes Freemasons / secret cabals who rule the world, and they've had a lot of ex-presidents and others on their boards, and Freemasons and all that fun stuff. Knights Templars, or if you're into all that fun stuff, we got a nice doozy for you here. Kicking things off in the realm of the Carlye Group, ticker symbol, of course, CG. This one doing, on a given day, about 400 some odd contracts a day. So typical odd block paper. Doing today about 6,500 here. And Mr. Rock Lobster, it seems like somebody, I'm just going to go out on a limb here and speculate. It seems like someone, perhaps a little bit bullish, the tinfoil hat crowd. We saw paper coming in and gobbling up, in particular, the June 17 halves, paying a whopping 85 cents for those bad boys. Like I said, the stock closing today, 17 half, almost exactly. So these are precisely at the money calls. Started doing it only 229 times, which even in this name is notable volume. It was 50% ADV. Ended the day doing over 4,000 of these bad boys on only 400 contracts open. We also saw some Junes going up as well. Actually, let me rephrase that. These were the Mays that we caught going up 4,000 times for about that price range, and then we saw the Junes going up for 85 cents. Those went up a total of 1,700 times. So it seems like we had some interesting, many and diverse paper. Perhaps a time stupid, Mr. Rock Lobster here with the at the money May and June, or was it more of perhaps a ratio? What was your take on this funky paper in this tinfoil hat name?
There's just so many ways to talk about that right now. You got tinfoil hat crowd. You got time stupids. My gosh, this must be the odd block. I think that, you know what this was? I just think they're just buying calls. I thought at first it was going to be closing the May, buying the June, but it feels like it's some sort of investment newsletter thing saying, it's time to just scoop up all these private equity companies because rates are going to stay low forever and they're going to make tons of money. So, the earnings aren't for a couple weeks. These options are not very expensive. So that's all I can say on this one. I just think somebody is looking to do a little scoopage here of the Carlye Group, and it feels like it has all the flavor of a newsletter. Let's just put it that way. The stock was $32 not very long ago. So, a lot of names have been beaten down. And all I can say is SPX 2094. So you start looking for companies that, if let's just say if Hillary gets elected, she's kind of connected. So you never know how these guys will do under those circumstances. So anyway, Bernie wins. Well, maybe you buy some puts, but anyway, I think I just think somebody wants to get along this thing. It's just not very expensive options.
Somebody's bullish Freemasons and Templars out there and all that fun stuff. If you want to search for Carlye Group and conspiracy theory, if you want to have some fun reading, listeners. Meanwhile, we'll move on to some other equally interesting, perhaps not as tinfoil hatty, but you can't talk the odd block these days without something resources related. I don't care if it's mining or drilling or whatever the case may be, pipelines, what have you. Today, our subject du jour is going to be Western Gas Partners LP, ticker symbol WES, W-E-S. Mr. Rock Lobster knows I like those. Closing today, about $46.91, up nearly $2, or about 4.5% on the day. It's the name that does pretty decent volume for an odd block candidate. About 1,200 contracts a day. Today, doing the old up and out to the tune of long-term, too. This guy's not messing around, Mr. Rock Lobster. He's like, you know what, I'm all the way out at AUG, but I'm sitting pretty at my 45 strike, so let's just head on out a little bit. Let's go out to the NOV strike. So in particular, we see the AUG 45 NOV 50 roll going up about 10,000 times and some change. Looks like paper selling the AUG 45s, buying the NOV 50s, doing that, like I said, about 10,000 times, about 10,600 open on the AUGs. Nothing appreciable open on the old NOVs, hence the roll speculation. This one's been an interesting candidate as well here, Mr. Rock Lobster. I'm assuming our friend here put these on sometime in perhaps the Jan to Feb time frame, because this thing was hovering quite a bit south of here back then. In particular, it got down as low as mid-February and all the madness was happening, right around 26.5. So this thing having nearly doubled over the past couple of months here. So our friend sitting on these 45s that were fairly optimistic back whenever he put these bad boys on, is now rolling them up to the still optimistic but slightly less so NOV 50s. Not doing the old 1x2 on the up and out. When he's sitting on house money, sometimes we see people liking to swing for the fence a little bit more on the second leg. He's keeping that money in his pocket, Mr. Rock Lobster. He's just doing the old 10,000 by 10,000. That's all. Not 10,000 by 20,000. But still interesting stuff here. Clearly, he doesn't think the upwards run is going to abate anytime soon out here in West, and he may be onto something. This thing back in May of last year was trading nearly $71. So if that is indeed the case, he still has some upside to go. What's your take here, Mr. Rock Lobster, on the old up and out in West?
Yeah, I'm guessing he paid like nothing for these calls. What do you think?
Yeah, if you put them up a month or two ago, they had to be pennies. Nothing. You know what I mean? The 45 strike? That's crazy. That was crazy town 2 months ago.
Everybody, that's, and we saw a paper like in AMJ and a lot of these MLPs, people were buying like 20-30% out of the money, and now they're at the money. So What are you going to do? If I was up that much money, I would take it and roll it too. So, and I think, again, I have no idea where oil prices are going, but they certainly they didn't go down a whole bunch today, considering the not great news out of OPEC. And I just, again, this feels like a house money roll to me, and somebody wants to stay in. And I think they're going to stay in to make some big dough.
Yeah, when they're rolling, in this case, when they bought nearly 100% out of the money calls, and then they have to roll them, there's no way they can probably lose money on this. He's pocketing more than enough, I'd imagine. He probably paid pennies for those. He's probably well to the good. This new 10,000 could go to zero, and I don't think he'd be too heartbroken. Maybe a little sad, but he's doing all right on this trade overall. So there you go, listeners. That's the moral of the story. Just swing for the fences. Like I was saying to Mal earlier, just swing for the fences, and it all works out right. Hit the craps table, play the hard ways, the horn high yo, and you're good to go. Moving on to our final name here. Again, another area that's been popping up on the odd block with some frequency of late. This is the old steel production realm. Call it what you will. Today's victim, AK Steel Holdings Corp, ticker symbol AKS, closing today. $4.89, just a tick under the $5 handle there. This is the name that does decent paper for an odd block candidate, even our cheapy ones, about 10,600 contracts a day. Again, the whole argument, is it a stock, is it an option? We'll table that for now and instead look at the paper that was lighting it up today. In particular, it was some longer term and fairly out of the money, but again, not that far, given the fact that this is such a cheap name. We saw paper flooding in, to use the technical term, to the Jan 2017 5.5 calls. So size paper in those. Let me just scroll down. Here we go. The Jan 2017 5.5s going up. The first chunk we noticed, the 5,000 lot, going up for 86 cents. Paper buying as the day went on. A total of 11,500 piling into this strike at some subsequent prices. They went out about 87 at 91, so he got his latter kind somewhere in that range. Open interest only about 3,500 contracts, even though there are 57,000 open on the 5 strike before it. Again, cheap name, dearth of strikes, not a lot of options, pun intended, to pick your poison out here in a name like this. We didn't see a price variation tag, so that sometimes is an indicator that something else is afoot with this trade, but didn't see any indications of that. No stock, nothing else really slinging with this one. So it seems to be what it appears to be on the surface. Someone really loving this bad boy and doing it for some size. Looking here, going back for a while, you gotta really head back some ways to get where this thing was over the 5 handle. You had to go back to August about 2014, when this thing was trading about 11.5. So if you want to go all the way back that far, this thing has some upside to it. But near term, not so much. Mr. Rock Lobster, take us home here on all the upside love in AK Steel Holdings Corporation.
Well, I think all the steels, iron ores, all of these, they basically, because the China slowdown or the worry about China slowdown, over capacity, they crushed all of them, crushed them into dust. And now they look like they're going to, start to, rise like Phoenix from the ashes. So I think this, people are looking at some of the prices that some of these steel producers were, the fact that there could be some bargains out there. The stock, 2 years ago was trading for around $12. So, maybe it's they're looking at that saying, well, maybe we get a little bit of a lift out of this thing. So, the company does make money, and anything is possible, but we'll see what happens. But I think there's definitely a good, people are looking at recovery. Remember, because a lot of these things sold off because they're convinced a recession is going to happen in China. If it doesn't happen, what are they all worth? And I think that's and I think some people are starting to get a little bullish on the idea.
would seem to be the case. I think a little bullish is charitable for this one. We got a lot of bullish love here on the old odd block today. But that's all the time we got for tinfoil hats and Freemasons and drilling and steel and all that fun stuff. Instead, it's time for us to keep on rolling. It's Monday, and we're cranking with the show today. So I think why not? We'll give you guys an extra bit of bonus here for the show. We'll squeeze in a strategy block for you guys.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you guys know the drill. It's time for Uncle Mike to break it down, sir. Some wit, some wisdom, some hilarity, perhaps a little Freemason madness worked in there, too. You pick your poison, sir. The floor is yours. What do you got on the docket for our listeners today?
All right, can't say I'm going to be delivering any Freemason madness, but nonetheless, the rest of it, I'll see what I can do. I want to talk today about diversification. A lot of people have been looking at their finances again with tax season being over, or I guess technically you still have till midnight to send in your checks for those of you that are listening live, or e-file, whatever it is that you're doing. But nonetheless, a lot of times people are looking at their overall financial picture, their portfolio, on what they want to do. And a word that oftentimes comes up, and rightfully so, is diversification. Now, what I want to go through today is real diversification and how it makes sense to look at the full picture and not just stock market-based diversification. I have an exercise I'd like all of our listeners to do in case they have not done this already. Go ahead, and I'm sure in your online broker you have the ability to do an overlaying chart. And do an overlaying chart of the S&P, the Russell 2000, the S&P mid cap, the S&P 500, as well as an international index, and just all the basic stock market indices throughout the last 20 years or so. Now, at times you'll see differences in terms of how they perform. Some years small caps outperform large caps, or some years large caps outperform small caps, and international does better some years, does worse some years. But over time, you'll notice it is very similar if you look at how stocks perform throughout time. Now, with that being said, I do think it's important to have some type of diversification from the standpoint of the stock market. But what I think is even more important is to have some diversification of the overall portfolio. There's four major asset classes that exist: stocks, bonds, commodities, and real estate. Now, all of them kind of take on their own flavor. Stocks, for instance, any business is technically a stock. Sometimes it's publicly traded, sometimes it's not. If you own part of your uncle's pizza joint, you technically own a stock. Now, granted, that would be a small cap stock or a micro cap stock, or not even a publicly traded company, or you could call it non-public equity, whatever you want to say, or private equity, whatever you want to call it. But the point is that would fall into the category of stock. You own a company. The next asset class would be real estate. Real estate's fairly simple. If you own your own home, you are a real estate investor. Now, is that a great investment? Should you look at it as part of an investment? That depends on your individual situation. For some people, they're so far underwater with their mortgage, they basically don't own their own home, and technically it could come back. But the reality is that it's the equivalent of just owning some really far out of the money calls from the standpoint of an investment. Now, with that being said, if you live there and you're happy there and you plan on just paying off your mortgage over the 30 years and let the chips fall where as they may, then that's the way you should do. That's what you should do, I think. But my point is that you can look at your home in a lot of different ways. Sometimes it can be considered an investment, sometimes it can't. Let's say that your home is totally paid off and you're looking to take out some equity to invest elsewhere, to pay bills, or maybe even do a reverse mortgage as an income stream. Well, then you can start looking at your home as somewhat of an investment. But until you have that, then it's really not, in my opinion, an investment. Other examples of real estate would be publicly traded REITs, local rental properties, things of that nature. So real estate would be the second asset class with which I'm referring today. Third one would be bonds. Anytime you loan anybody money, you technically have a bond. So the simplest form of a bond, you lend Mark Longo some money, he'll agree to pay you back all the money plus a certain amount of interest, then that's a bond with which you own. Now, there's all sorts of different forms of bonds. You have publicly traded bonds, whether they're municipal bonds, government bonds, corporate bonds, but you have bonds. And the bottom line is that although the terms may be different, a bond is technically lending someone some money. Now, the final asset class would be commodities. Now, commodities are something like gold, oil, silver, coffee, cocoa, sugar. Those would be examples of commodities. With that, if you technically have an investment in a gold coin that you bought at a money show, or if you own GLD, 3 guesses on to which one I prefer to buy, but either way, you have a commodity investment. And with that, you have something to where you're going to perform in line with gold in and of itself. Now, where I'm going with all this is that I think you need to have some type of exposure in some way, shape, or form to all 4 of those asset classes, even if you don't believe that they are going to go up right away. So, for example, let's say, like me personally, I think that bonds are not a very good place to store a lot of money right now. So what I'm doing with my clients with the bond section of their portfolio, primarily, not everywhere, but I mean, there's some clients that still do have individual bonds, but there's a lot of them that what I'm doing is waiting for TLT to pull back again and sell another put on TLT. And so where we're at right now is cash. I feel that bonds are a little bit too rich for my blood at this point. So with that, I think that there should be some strategy of some sort in all 4 of those asset classes. If you already own your own home, and even if you are paying a mortgage on it, and even if you are in that situation where you have the out-of-the-money calls, comparatively speaking, as I described earlier, with that, you probably don't need to be loading up on REITs because you have a lot of real estate exposure already through your own home. If your own home is just one section of it and you're really good at real estate investing, then by all means, do the rental properties, do it what it is you do. The whole point of what I want to say today is that stock diversification is not true diversification. If you feel that, oh, I have X% in large cap, X% in small cap, X% in mid cap, X% in international, I'm diversified, you're really not. What I want to emphasize today is really take a look at the other 3 major asset classes and take it from there. And that is one to grow on for today, April 18th.
And I certainly can wholeheartedly endorse all of our listeners getting behind some bonds from me. Just send them over my way, and I will stand behind all of those. There's no counterparty risk whatsoever. And I got my buddy here, Legsy, to help me enforce the stuff. All right, let's keep on moving. We're cranking with this show. We're just rolling along. So let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time for you to tell you what we're watching for the week to come. It is a rocking and rolling week from an earnings perspective. I mentioned we got the Widowmaker coming up here. It's going on right now, I should say, after hours. I was saying it was off solid, but still underperforming that straddle. That straddle was pushing at about $12 and about $11.75, and here we are right now, about $11.65, off nearly 11%. So they are pushing the outer boundaries of that straddle as we speak right now, listeners. So good chance we may open up beyond that tomorrow in the old Netflix land. Tuesday, we got my old stomping grounds, Intel, got Goldman, got Gold Interactive Brokers, TD, and even the much maligned Yahoo. What the heck are they up to? Wednesday, Coke, aka the favorite of the Oracle of Omaha there. We got American Express, Mattel, makers of fine toys if you are so inclined. We got GM before the open on Thursday, Southwest, Under Armour, and then after the bell, a lot for us to explore on Thursday. Microsoft, good old Goog / Alphabet / call it whatever the hell you want. E-Trade, Starbucks, Visa, and then a few more rounding it out on Friday, including McDonald's. I should also mention to you guys, we got our own poll going, our options question of the week this week. Mr. Rock Lobster and Uncle Mike, put on your thinking caps. Just posted a couple hours ago, already votes pouring in. We say question of the week is they were pricing in, as of when we wrote that question about midday today, they're pricing in about a $39 straddle out there for Goog / Alphabet. So we asked everybody, how do you think it's going to do on Thursday? Is it going to is Google going to blow the doors off that straddle? Is it going to mildly outperform, slightly underperform, or dramatically underperform? Uncle Mike, what did you guess? What do you think is winning so far? What's your guess, and what do you think is winning?
My guess is it'll slightly outperform. What I guess is winning so far is I'll go with the same. I think our listeners and myself are on the same page.
Interesting. Mr. Rock Lobster, where do you fall, sir?
Actually, yeah, and Mal was sending me some fried catfish too. I thought I'd give that a little whirl as well. So I've just been eating. I think slightly out. It will slightly outperform, and I actually think though the listeners are going to be a little more giddy and say it's going to way outperform.
That's how it was leading early in the voting. It was like all the votes are coming in on blow the doors off. That was leading the charge. But as the day has progressed, saner heads have prevailed. Where now it's still pretty close. It's neck and neck, but mildly outperform has fought its way back. About 42% right now for the mildly outperform. 37% for blow the doors off, so another big goog surprise to the upside or the downside. Only 21% slightly underperform. And I guess no hardcore premium writers in the audience because 0% dramatically underperform. So not even one vote yet for that. We'll see how that goes on. We have this poll primed to go right up until earnings time on Thursday for Goog/Alphabet. So if you haven't voted already, make your voices heard. And that said, speaking of making your voices heard, let's start in the land of the Rock Lobster before he starts eating again. Mr. Rock Lobster, what are you watching for the rest of this week? A bounty of things to keep your eye on this week, sir.
Yes, control the mute. Yeah, just, you know what? See, I think good earnings or surprisingly good earnings could take us to back over 2,100 and beyond. I don't think the market is cheap. I thought we haven't really seen better earnings than we have last year. So, you know, I think mostly any rally is just a relief that, you know, things aren't as awful as we thought they were going to be in January and February. So I'd like to see some earnings. And I also think, if this pace keeps up, we're going to see volatility. We'll just keep, grinding away lower. But it's hard to get too excited to sell it here, but it does look like it's going to grind a little lower, I have to say.
And Mr. Uncle Mike, what do you keep an eye on for the rest of this week, sir?
Well, we are probably about 50 points below a new all-time high in the S&P, between 40 and 50 points. So watching that, if we have a really, really, really big day, it could create a new all-time high in the S&P at any time now, which with that, I might start saying it again. The never before has there ever been I'm just going to tease. I'm not going to actually say that. But that's one thing that I'm watching all the earnings that you had mentioned. And then also, let's not forget, tomorrow night on April the 19th, we do have the New York primaries. That's something that could be a market mover. You never know in today's market.
You do indeed never know, sir, but unfortunately that's all the time we have for the Around the Block segments. Also all the time we have for this jam-packed episode of the Option Block. Never let it be said, listeners, that we don't deliver bang for your buck, bang for your listening dollar. Considering you don't pay a damn thing for it, it's a pretty good deal. We've packed in a lot. I want to thank our guest there, Mal Clissold, for joining us here. If you want to check him out, go surf on over to or search the Googs for SCC Capital Group, and that'll take you to his various outlets, or indeed hit up Mike or Andrew. I'm sure they can direct you as well. And speaking of the Rock Lobster and the Uncle One, they have one more time to check in to do their own various plugs. Let's start with you, Mr. Rock Lobster. In addition to your new investment in a lobster oil company, what else are you guys cooking up in the land of the pit?
April 20, we have a webinar this week. No, April 27th and May 7th and April 22nd. May 7th is our portfolio management Saturday class, and April 22nd will be the Mark will be giving a free webinar that will basically set the groundwork for that class. So those things are coming up from the pit. Option Pit /events.
There you go, listeners. Surf on over to get your edumacation while the getting is good. And speaking of getting things while they're good, maybe you want to go along with Uncle Mike. He's here to tell you how, as well as a few other things. Maybe a little late on the IRA front, but you can always play with Uncle Mike. He'll roll some puts for you, and he's going to tell you how to do it right now.
Let's roll some puts, baby. Monty Hall says, let's make a deal. I say, let's roll some puts. Give me a call, folks, 312-212-3531. If you have any questions on your investing and or trading, would love to help you and work with you in any way possible. Or feel free to send me an email at mtusaw@rcmfs.com.
There we go, listeners. That's going to do it. And on behalf of Uncle Mike and the Rock Lobster, and even our guest, Mr. Mal, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. Keep them coming, and of course also for tuning in live. Love to see you guys over there in the Mixlr chat room, MIXLR. And now, of course, you can also get us in the Google Play Store, so make sure you do that and participate in our options question of the week for Goog/Alphabet. How you think that straddle is going to do, let us know. And we'll see you next time right here on Thursday. We can talk about those earnings live for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.